Okay, let's cover an example here of basically an unearned revenue. In other words, a liability where we've gotten the cash, but we haven't really earned it yet. In Transworld Publishing here, basically it says during 2014, the following happened. On October 1st, you sold a one-year subscription, collecting cash of 1,700, and plus you're collecting also sales tax of 9%. And then on the 15th, we remitted the sales tax to the state of Massachusetts. So the sales tax associated with this transaction, we paid to Massachusetts. And then on the end of the cycle, December 31st, we're making the necessary adjustments at year end. Well, what that is we're adjusting the unearned subscription revenue account to what it should be. Let me tell you the temptation you need to avoid on test day. When you see a problem like this and you're making your entries for October 1st, you're going to have a tendency to do this. You're going to say, sold one-year subscription, collecting cash at 1,700. You did not collect cash at 1,700. You collected cash at 1,700 plus, that's what the English word plus means, sales tax of 9%. So to get the true amount that you need to put here for cash that you collected, you need to recognize that 1,700 was collected, right? But you also collected 9% for sales tax. The easiest way to come up with the total amount that was collected is to just multiply this by 1 point, whatever the rate is. In this case, it happens to be 9%. So the easiest way to mess with this is to multiply it by 1.09. If you multiply it by 1.09, you get 1853. Check my math here. Yeah, 1853. And this is the true amount of cash you collected. Okay? We would love here to book subscription revenue, right? The problem is that we sold this one-year subscription ahead of time, collected cash, but we haven't earned it yet. So you need to not book subscription revenue, you book unearned subscription revenue. And what you've earned is 1,700. You're not in the job, you're not in the business of earning sales tax. That's what the state does. Then your difference here is this amount that you collected, this amount, the difference between 1853 and 1,700. Another way to express it is 1,700 times 9%. 1,700 times 9% is 153. That's how you get from 1,700 plus 153 is 1853. So this doesn't really belong to you. This 153 doesn't belong to you. And you owe this to the state. Sales tax payable. And that's who you pay sales tax to. Notice, obviously, your entry's balancing. You're recognizing that you've gotten cash of 1853, the 1,700 plus the sales tax. You've got a liability of unearned subscription revenue of 1,700. You haven't earned that yet. You haven't delivered anything yet. And you've got sales tax payable of 153. That's the 1,700 times the 9%. Look at the next one here. November 15th, you're being asked to journalize, in other words, to make an entry for the sales tax. Here, remitted paid, in other words, remitted is another word for paid the sales tax to the state of Massachusetts. Well, let's kind of go backwards here. If we're going to pay, that means cash is going to drop, so that's going to be your credit. Okay. The only thing up here that you've collected for another party is the sales tax, and you're paying it to the state of Massachusetts. So cash is going to go down by 153. Then what you're taking off the books is the sales tax payable. So basically what you're doing is you're saying, hey, okay, it's November 15th. We're going to pay the sales tax. So we credit cash. Our cash drops. That's dropping that original amount, right? 1853 down by 153. And then the sales tax payable, you're taking it off the books. If not, this payable would be on the books forever. You know, that's why you're paying it. Let's look here at the last part here. Here, basically, what you're doing is you're saying, okay, make the necessary adjustment year end, December 31st, to record the amount of subscription revenue earned during the year. Okay, so of this amount that's unearned, the 1,700, a certain part of it has been earned. Okay, specifically 3 months worth has been earned. Remember, you sold it on October the 1st, so it's October, November, December, that's 3 months. So we need to recognize 3 months worth of this. Easiest way to do this is recognize that you sold a one-year subscription. So this 1,700, let's put it here, really needs to be divided by 12. So you divide that by 12, and when you divide 1,700 by 12, you get 141.66. Okay? I believe it rounds up to 141.67, whatever. So you're really earning this 1,700 over the course of 12 months for this much per month. Another way to look at this that might be easier or more intuitive for you might be that 1,700 is for an entire year. Well, from October to December 31st, that's when you're making the necessary adjustment, is 3 months. So you need to recognize 3 months, 3 over 12 months worth of this. If you take 1,700 and multiply it by 3 months over a total of 12 months, you remember you just sold a 1-year subscription. That's another way to kind of back into this, if this is easier for you to think of. So 1,700 times 3 divided by 12 is 425. So 1,700 times 3/12, another way to say it is 1,700 times 3 divided by 12 is 425. So if you come over here, we know it's going to be 425. Now the question is, what do we book? Well, we've earned that, so now we have subscription revenue. We know that over the course of 3 months, we've earned 3 months worth. And now what you start unrolling is this unearned subscription revenue. So unearned subscription revenue, you slowly start unrolling out of this original 1,700, and it comes out and goes into subscription revenue. And that's how we are able to recognize how much we truly do owe at the end of the cycle, at the end of December 31st. Keep in mind that what you're telling the outside world is, this is how much we took in and had not earned yet. Well, when you take 425 out of that through this debit, there's going to be a balance left, and that balance that's left is the true amount that's left. And I'm going to show you what I'm talking about here. Here it asks you to do kind of a partial balance sheet. When it asks you to do a partial balance sheet, what it's basically saying, hey, you know, for current liabilities, because this is all current, unearned subscription revenue is the difference between 425, right? Because we unrolled the 425 and the 1,700. And that gives us 1,275. Okay, and 1,275 is nothing but the 1,700, the original 1,700 that was put in the liability account, minus the 425 that was earned through the end of the cycle, through the end of December 31st. That's how you handle this kind of problem. One of the things that I've noticed students will get tripped up on, you've got to be careful with, is you're kind of anxious and you're kind of in a hurry, and you see sold a 1-year subscription, collecting cash of 1,700, and you're ready to go cash of 1,700, and you put it here. That's not what you're collecting. You're collecting that plus a sales tax, and that raises that number up. This money here in the sales tax payable is basically just like saying, hey, we're holding it, it's in our cash account, but just as soon as it's due, we take it right out of cash and give it right to the state of Massachusetts in this case. And then here we're just adjusting, accruing subscription revenue of 425. That represents October, November, December, and that's 3 over 12. 1,700 times 3 divided by 12, and that's our 425. Be sure and practice these. You can't just do these once and be super fantastically confident. The more you practice it, the easier it gets to do this quickly and accurately. I hope this was useful.